Good afternoon, VV Nation. Welcome to the Hot Stocks panel for June. Joey, what is the exact title for this? The hot sizzling stocks for June? 10 summer stocks that's, wow, that's a tongue twister. 10 summer stocks that sizzle. So welcome. Once again, my name is Glenn Tompkins. Always glad to have you here on our YouTube live channel. For anybody who's new, welcome. Make sure you subscribe to the channel. For those of you who are part of the regular VectorVest Nation or VV Nation, always use that hashtag. Let's get that to go viral. I'm joined here with three of my more esteemed colleagues. That's just leave that alone, right?
I thought you were going to say extinct.
Well, that would be Todd. But anyway, thank you for being. Thanks for being here. To my left, we are social distancing. To my left, we do have Steve Chappell. In the rear, we have Jim Penna, and
The Walking Dead. Todd.
The Walking Dead. We have Todd Schaefer. All of us, which are part of our education department. Excuse me. So we're all glad to be here. So 10 summer stocks that sizzle. This is the June Hot Stocks panel. Just a little bit about each one of ourselves. We're going to go around. But my name, again, how many times I'm going to say it, is Glenn Tompkins. I've been here for 16 years. I am in the education department, and I'm part of a lot of different webcasts that go on. What you will see going on in this presentation is you're going to see a lot of different perspectives on finding stocks to invest in going into the summer months. There is a disclaimer though. As a VectorVest subscriber, you know that the market is totally big time overbought. Just be careful. All right, the Fed will be talking throughout this presentation. I will be keeping alerts on my phone active. I really am interested in what he has to say and how that will affect the market.
It is rallying right now.
The market still is rallying right now.
It just started. It just went up about 200 points in the last 30 seconds.
Wow. So, and Steve Chappell alluded earlier before we came on that he doesn't think that the Fed is going to say anything that's way out of whack. We will be keeping our eyes on that. But understand that as a VectorVest subscriber, the market is overbought. If you are not a subscriber to the software, Joey is going to put a link in there that you can take a trial, 99 cents for 30 days. By the way, say hi, Joey. Hi. That is my producer in the background. He's the one that makes me look good on Thursdays, and he's making even Todd look good even today.
As best as he can.
He's making Todd look good the best as he can. All right, so the Hot Stock panel is all about, we do these every month, where we look at stocks to take advantage of. We walk through why we like the stocks, and you will see different perspectives on them. Big time. We are growing this channel. If you like what you see, if you like the presentations, do not be afraid. Folks, do not be afraid to subscribe to the channel. VV Nation, talk to the people in the room who are thinking about taking a subscription. Talk to them. Let them know what they'll get. All right, so I'm going to leave that up to you. We're not looking at chat today, so Jay, behave yourself. That's all I got to say about that. Behave yourself because everybody can see your chat. We will be giving a giveaway this afternoon. We're going to give away the Successful Investor course. The keyword to type in, and I guess you're going to start typing it now. The keyword to type in is VV Nation. VV Nation. And that will get you qualified for a free giveaway of the Successful Investor course. All right. I do have a link. And I think we're going to bring it up. And let's go. I'm going to open up a website. This is our new university. I'm going to type that in real quick because it's on my paper to do so. University.vectorvest.com/catalog. All right, is that it? I had that. So evidently that is the new university on the stream. This is it. So it is university.vectorvest.com/catalog. All of our Courses, thank you, Steve. All of our courses are laid out here with the prices of everything as well. So this is newly put together, university.vectorvest.com/catalog. Joey, if you can, please put that link in the room for the people to click on. All right, so I'm pretty much right, a little early today. Huh, that never happens. I'm a little early today. So with all of that being said and done, let's get back into the software. And we're going to start off with the picks that we do have in our panel this week. This is a listing of them. Every time we go through this, everybody says, what were the 10 stocks? Take a picture. All right, take a screenshot. These are the 10 stocks that we will talk about today. All right, starting with CDNS all the way down to Nokia. Now, we're going to start with my 3 stocks. I have 3, Steve has 3, Todd has 2, and Jim has 2 to give you a total of 10 stocks. And I will start off. So here's all 10 of the stocks that I chose. Anybody who knows me, you saw Apple was up here. Who else do you think would have picked it? Any one of us could have picked it, but most likely would have been me. So Apple is one of my 3 stocks, along with Boston Beer and Nokia. All right, so I'm going to analyze them real quick. As I look at Apple, Apple is considered to be fairly valued because the price and the value are pretty close to each other. Value is what we feel the stock is currently worth, and right now we say that Apple is worth $356 as it's trading at $352. As I move over, a lot of the indicators that make us unique in this space, in this investment space, is what can make the difference between making money in a stock and not making money in the stock. It's good to know where the value is, but our indicators, RV, RS, RT, VST, and CI are proprietary indicators which are all cast on a scale between 0 and 2. Relative value looks at a stock's upside potential. Relative safety is an indicator of risk. It looks at the consistency and predictability of a company's financial performance. Relative timing looks at a stock's short-term price trend. Is it in an uptrend or not? VST is the overall ranking from the stock, looking at the combination of relative value, relative safety, and relative timing. And last but not least, CI is the stock's comfort index, the stock's ability to withstand long or lengthy price declines. So as I analyze Apple, it is fairly valued, good upside potential. As these indicators are all cast on a scale between 0 and 2, we make it easy. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. Apple still remains to be a safe stock in the database. And right now, knowing that the market is up the way that it is, notice that every stock in our list has an RT above 1 and showing characteristics of really being in an uptrend. Well, that's what happens when the market is at a level where it's being overbought. And the VST in the list, sorted by VST, is number 5 in the list. So it's a good quality stock, and it's got the resiliency to rebound after the stock goes down. And the earnings growth rate is at 14% a year. Boston Beer, this stock, on the other hand, though, is overvalued. It's trading higher than its value, which means that people are willing to pay a premium to own the stock. Now, because the stock is overvalued doesn't make it a bad stock. Upside potential is there. The stock has got a good upside potential as compared to an alternative investment in a AAA corporate bond. Safe stock, above 1, it's favorable, and the stock is clearly in an uptrend. By way of VST, it's number 9 in the list by way of the 10 stocks, but still a good quality stock. CI tells me that the stock has the wherewithal to withstand long or lengthy price declines, earnings growth rate at 20%. Nokia, though, in the list is number 10 out of all of our picks. Why did you pick the worst stock in the list? Shh, I got this. The stock is considered to be a little bit undervalued at $445 as the stock is trading at $531. It's got good upside potential. This is what's hurting it. It's not altogether a safe stock. This means that when earnings comes out, it may or may not meet up to its earnings expectations, but the stock is in an uptrend. Overall, even though it's got the worst VST in the list, overall it's still a good quality stock, and this stock is more susceptible to long and lengthy price declines. Maybe not as resilient as my other 2, but growing their earnings at a clip of 11% a year. So I wanted to do a basic analysis of all three stocks. Now we're going to move over to the graphs tab. Let's start off with Samuel Adams. All right, or Boston Beer. It's the same thing. Now, I'm looking at a 1-year graph. I've made some annotations on the graph. Notice that in a 1-year look-back period, there was a time when Boston Beer was in a channel. As the stock was in the channel, what was earnings doing? Earnings was rising for a little bit time in the channel, and then even while it was in the channel, earnings normalized and just sat still. As the stock's price pulled back below this level of the support floor in the channel, earnings held its own. Now, what I do like as I look at this, the stock's price went above a 20-day exponential moving average, and that moving average is serving as a beautiful support level for the stock as it's moving up. Even as the stock has most recently pulled back, that moving average is still sitting there as a good support level. Now, down day to day, would I buy the stock today? The answer to that question is no. I would rather to buy on a rising, or buy a stock that's rising on the day that I get into it. Preferably, I really would like, with this nice long upturn, I would definitely like to see the stock hit above that high. I would put a buy stop order about 12 cents higher than the high. Something else that's going on with the stock. They're getting into the hard seltzer business. All right? You know, like seltzers and with alcohol. There's 3 big companies that are involved in this. The big companies, Anheuser-Busch, also Constellation Brands, and Boston Beer. 3 big companies that are leading the market as far as hard seltzers. I am going to liken the hard seltzers to energy drinks when they first came out. They were hot, right? Everybody was jumping all over Monster for a while, and that stock took off. While I'm thinking that, couple of things. Hard seltzers, getting into that space, Boston Beer may take off. And number 2, we're getting into the summer. Who doesn't drink beer in the summer? Now, not everybody, but it's going to be a hot time for beer. All right, so those were the 2 reasons why I picked up Samuel Adams or Boston Beer. Looking at the graph, like what it's showing me, I would wait for a better entry, at least higher than the high, and the earnings per share has been very steady as the stock's price has been going up. Earnings is the engine behind the stock's price movement, and you know, I'm thinking that going into the summer, beer might be on the rise, but keep your eyes on those hard seltzers, and they are getting in that space and going to be one of the top 3 looking at growing that business. Anybody want to chime in?
I will. The only difference I have for you is I don't mind the entry here.
Okay.
On an up day, I'm with you on that. I want the follow through, but there's plenty of headroom to that prior high. You got what, $75 to get to that prior high?
Thereabouts. So the high is sitting currently, let me change that up. The high is sitting currently at a value of 587. We're currently trading at about 529.
Okay, so you still have $50, but the idea here is you've got plenty of headroom. You're coming off that pivot low. That gives you a nice stop loss. So I've got a 2-to-1 there just visually at least. So I like the entry right off the pivot as long as the market and the stock come back to us.
Excellent. Anybody else?
Yeah, the same thing. I might set the buy stop just higher than that previous high, just get it trading higher than that. I wouldn't wait until it gets to whatever that is, a year or whatever that graph is. I wouldn't wait that long. That's a huge move.
Okay.
But otherwise, this graph looks great.
Steve?
Yeah, my only mild concern would be the leveling of the moving average, which generally indicates that some sideways action is brewing here. But what you guys said takes care of that. If you mind what they said, you buy the higher high, that average should start moving higher again, right? And that cures that problem. The other thing I would mention is Sam Adams does Trulies in particular, which is the one that's all the rage. So I've had a few Trulies in my day. They're pretty good in the summertime.
The only Truly I've had was Lionel Richie.
Oh, okay,
That's the only Truly.
Yeah. If you look at the last high growth phase of Boston Beer too, it was also summertime of last year.
So
if you look at the first part of the chart.
I am a big believer of, this was brought to my attention by my boss, Ray, and I looked at it and I said, you know, look at, there it is, back in June, July of last year, look at the run. So this could be, if you want to use the word cyclical, I think that's this is the time to buy it. This is time to buy it.
Makes perfect sense.
All right, real quick before I go on to the next stock, just want to let you guys know that we are currently on a podcast. This will also be a podcast. So thank you guys for pushing us to a point where we could make this into a podcast. And as we do our explanations of stocks, we're going to start to try to keep that in mind, that if someone is in their car listening, that they can understand what we're saying as well. I forgot to let my guys know that today, but this will also be podcasted. So guess what, guys? You guys are going to all be on a podcast. How cool is that?
Wow.
So if you wave now and go, hi, Mom, your mom won't be able to see you, but at least you know that you're on a podcast. So just keep that in mind. All right, I'm going to move on to my next stock. I don't know why I said that. I don't know. All right, my next stock is Nokia. Now, Steve has got a stock that's in this space, and I'm going to let him talk a lot more about 5G. But Nokia is in the 5G space, and I'm going to leave it there, and I'm going to not steal Steve's thunder because I think that he would do a much better job explaining that space than I would. I definitely cherish a lot of the things that he says and the way that he says them. But in this space, we have Nokia. Looking at a one-year graph, over the last year, Nokia had been moving down, down, down. Most recently, see that downtrend that's there connecting the highs? Most recently, the stock broke out of that downtrend. Coming off of a level of a support, broke through the downtrend. It went above, prior to breaking through the downtrend, it went above the 20-day exponential moving average. RT helped that along the way. RT is the indicator that tells you when a stock is in an uptrend or not. So stock came off a low, went above the 20-day exponential moving average. RT coincided with that as the stock's price drove higher. Now, this is the time when you would have been, well, is it going to stay in the downtrend or not? And it did not. It continued higher out of the downtrend, moving higher, a little bit of consolidation right now. But I picked this because it was in the 5G space. And again, Steve is going to talk a little bit more about that. But I think this could be a nice early entry on a lower dollar stock in the 5G space. I do need for this stock to get out of the current consolidation that it's in. It does have a couple of levels of resistance to get through. Right now, it's currently trading at one of those levels of resistance. Now, what does catch my attention, that earnings per share is falling. But notice that as the stock's price has been moving higher, earnings is leveled out. All right, it's no longer falling like it was back here, nor is it rising like it was back here. But currently, with the move up in the stock, earnings is settled down. RT moved up as the stock went above that value of the 20-day moving average, but I am also watching a little bit of a sideways move on RT, which could be telling me that Nokia could be getting tired. I am hoping and thinking that in the space that it's in, if that industry continues to rise, Nokia may be a stock that's on the lower dollar spectrum within that space. And if the industry rises, it will hopefully pull a stock like Nokia higher. All right. Anybody want to chime in on that?
I'll go real quick. Is that I like the idea. I roger everything that you're saying, but you are at resistance. And to your point of the stock that Steve's going to talk about, if I'm going to play that industry, I'm pretty sure I know the one Steve's going to talk about. I think I'd go with what I think is a better.
And I got you. This is
I
more of
agree
an
with-
aggressive play.
No, I agree with
Okay.
the concept behind it all. Again, it's right at resistance, and you're playing an industry. You're playing that concept of 5G, so it's as good as any of the others, except for the one Steve's going to talk about.
Okay. Todd?
Yeah, I'm with Jim. I just don't like that I'm up against that resistance level. You're plateauing right at that prior swing high. And once you break through that, you're right into another.
Okay.
So it depends on how it breaks out, right? If it breaks out with some volume and with some range, an igniting candle kind of approach, then I'd be more interested. But right now, it looks like it's going to pause.
Okay. Steve?
All right, so I'm actually not doing Skyworks today. I think
okay.
I was berated in the chat last time when I picked it, and it only went up about 40%. So I'm not picking Skyworks today.
I was thinking of your other.
He did have it.
Or Corvo, which I've also picked,
Okay.
which would be more in line with competition here. But yeah, I think there might be some better alternatives in the space. However, you know, they should get the benefit of birds of a feather flock together. You ever heard that expression?
I have.
Yeah.
That's the reason why I'm hoping that the industry
Yeah.
can get. And I know that it's a lower dollar stock, and I'm just playing that space to hope that a lower dollar stock can take advantage of that movement.
$1 on Nokia means a lot more than $1 on Skyworks.
I don't disagree with that. I don't disagree with that.
Okay.
All right, anybody else? No? Good. I'm going to keep moving on. All right. I actually got beat up a little bit. That's all right. I like that. That's the whole purpose of having a panel like this. I want to hear the perspectives, and you guys need to hear the perspectives, and you guys ultimately have to make the decision, right? So I like the input. And of course, what I like to call my own creme de la creme. This is my Apple stock. Now, one thing about Apple, everybody out there knows that I love Apple. And I want you to know that sometimes there's a bad time to play Apple. As much as I love Apple, I have never been in love with Apple. But a tried true stock, going back to summertime last year, look at that 20-day exponential moving average. It's playing and providing a beautiful level of support, riding the stock up. A good opportunity to get out is when price breaks below the 20-day exponential moving average. It did here shortly, then pulled back, and once that happens, that's a great opportunity. When the stock breaks below that 20-day exponential moving average, it's a great opportunity to be out of the stock. Notice I've got a line drawn at the last opportunity coming off of a low, coming off a major low, a hammer actually. Price went above the 20-day exponential moving average. RT went higher. Now the stock is in an uptrend. As that's happening, it's riding that 20-day exponential moving average higher. Even today, trading at $353, still hitting a new one-year high. And it might be an all-time high if I put on all the data, which I'm not going to do right now. But overall, the stock is rocking and rolling. RT is screaming. Earnings is screaming. There's nothing not to like about Apple right now. But understand, even as good as a stock as Apple is, I want you to understand that there are times when you need to not trade it. Why is Apple moving? Well, Apple made an announcement, and they called it code name Kilometer. All right, it's going to be announced at the WWDC. What is that? Well, whatever it is, it's a big tech thing where all tech people go and they do tech things. So, say again? Is it the Worldwide Developer Conference? Am I making that up? That sounds good to me. All right, so the WWDC is the Worldwide Developer Conference place. I know. So, anyway, it is a big conference where a whole bunch of techie people get together, and Apple is going to announce that they are going to be more hands-on, or they're going to make their own chips for their devices. That's going to be big because they've outsourced this out to Intel. Now they're taking that away, and they're going to now be doing it more so than outsourcing it, which could be big. And I think that people like it enough that the stock over the last 5 days has gone up 1, 2, 3, about 4 days in a row. 1, 2, 3, out. 4 days in a row, and beautifully staying above that level of the 20-day exponential moving average. And again, RT is screaming. Earnings per share, the engine that drives the stock's price higher, is rocking and rolling. The stock is a buy. I think that right now, for me, that was probably the lowest lying fruit that I could have picked as a stock going into the summer. But that news is probably really big news. And they got like 40 billion, trillion, quadrillion dollars sitting on the sideline. They still are very heavily capped. They got a lot of money out there. There I stand in regards to Apple. In that chip news, could be a big boost to pushing the stock's price higher. All right. Can't nobody say anything bad about it, not one. And if you do, I'm going to kick you off the panel right here, right now.
Apple sucks.
All right, you're out of here.
Jesus.
All right,
Just testing.
Jim, you have anything? Anybody?
No, it's a great stock. I was going to actually thought about choosing it today. You talked about, Steve and I were talking earlier about the chips. He had mentioned it to me. I figured you were going to do Apple, but it's Apple, and it's going up, and the market's rising. So not really a very creative pick there, Glenn.
Wow.
So I'll just say that.
Wow.
Not only is it going
Wow.
up,
You're off the panel, too. That's you. So,
We're running out of participants. You can't kick everybody off.
it's breaking out on blast off mode here. So your biggest question is, how do you manage this, right? Are you going to do a bar by bar kind of approach, or that prior resistance now support line gives you a nice exit point? That's the biggest question, is we've gone vertical here over the past two sessions.
why not? And if so, I'll give some answer to a possibility to get out. Why not put a trailing stop on the stock?
Sure.
Give the stock room to run. All right,
Well,
if the stock
here's
continues
the
to
problem
run.
I have with a trailing stop.
Okay.
What value?
What do you mean?
You're going to do a 10% trail?
I would do something like a 10%
Okay, right. What if you have intraday volatilities? Look at the volatility explosion you're getting, or the range explosion you're getting here on that price action, right?
Okay.
That's not 35 points a day, though.
No, it's not. But
I don't think, I think on a range, when you talk about the range on the stock is sitting at $354, I'm okay with putting a 10%.
I'll make it real easy on everyone.
Okay.
Don't sell Apple.
All right.
Sell a covered call if you hit some headwind.
Yeah.
That might not be,
You
that's
don't-
definitely.
you
I was
don't-
gonna say,
you
there's-
don't ever want to sell Apple, man.
Well, remember I
There's
did
option
say, because I'm
strategies to
not
keep
in
you
love
out.
with Apple, there are
yeah.
times that I would want to get out. And maybe if you don't want to get out, selling the covered call might be a great way to play. But Apple over the last year, that's probably one of the smoothest graphs that you're going
Yeah,
to see.
buy
in
a
the
put if you need to, but you don't want to sell Apple.
There's a
You
lot
want-
of basic option strategies to manage that.
Yeah, you want to give that one to your kids.
All right. I tried to do it a lot of times. I've bought a leap on Apple, made so much money on it that I've taken it off the table, and it just, I've done that on more than one occasion.
Yeah.
Apple just keeps surpassing
Yeah.
what I want to do over and over again. It's made me a ton of money.
Yeah.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.